Menes, the first Egyptian pharaoh, established the ratio of silver to gold by stating that 2.5 parts silver equal 1 part gold. Gold and silver were used as money, a means of exchange, and hard currency long before there were any fiat currencies. The price of continuous contract gold futures divided by continuous contract silver futures was as low as 15.5:1 in 1979 and as high as 111.4:1 in 2020 since gold and silver futures began trading on the CME's COMEX division in the 1970s. 63.5:1 is the long-term average. The silver-gold ratio, which is the ratio of the value of 1 ounce of silver to 1 ounce of gold, is a metric that can tell you where prices are most likely to go. A rising ratio can indicate lower prices, while a falling ratio typically indicates a bullish sign. Since late August 2022, the proportion has been moving lower. Silver prices in the area are tracked by the iShares Silver Trust product, SLV. Since April 2023, silver prices have fallen. On April 14, 2023, nearby July COMEX silver futures reached a 2023 high of $26.435 per ounce. The decline from this year's peak, which brought the precious metal to a $22.785 low on May 26, is shown in the chart. On June 2, silver futures were close to $23.90. The ratio has been decreasing. To calculate the ratio between silver and gold, divide the price of nearby COMEX silver futures by the price of nearby COMEX gold futures. Since the beginning of September 2022, a pattern of lower highs can be seen on the ratio chart, GCQ23/SIN23. A ratio that is going down indicates that silver is outperforming gold in terms of percentage. Outperformance typically signifies a bullish sign for the leading precious metals due to the fact that silver is the precious metal that attracts the most speculative trading activity. Silver futures have made lower highs since February 2022, but the pattern has shifted to higher lows since September 2022. Technical support is just below $20. Silver futures must remain above the March 2023 $19.83 bottom in order for the bullish pattern of higher lows to remain intact on the 10-year chart. 3 purposes behind silver to mobilize. The most convincing elements supporting silver in June 2023 are: de-dollarization. Since the end of World War II, the US dollar has served as the world's reserve currency. The bifurcation of the world's atomic powers since February 2022 undermines the US money's situation in the overall monetary framework. China is driving a work to foster a BRICS cash that could challenge the dollar's strength. Since the US dollar serves as the benchmark for most currencies, including silver and gold, de-dollarization results in a weaker dollar, which in turn supports higher commodity prices. Silver is no exception. Rates of interest. The cost of holding and financing long commodity positions has increased as a result of rising U.S. interest rates since March 2022. The short-term Fed funds rate increased from 0.125% in March 2022 to 5.125% in May 2023 as the central bank tightened monetary policy to combat inflation. Also, quantitative fixing has pushed rates higher for additional developments, coming down on rates. Commodity prices have been impacted by an environment of rising interest rates. In the meantime, the rate hike course is slowing down. The demand for silver may rise in the coming months as investors and traders become accustomed to the current environment, which features inflation remaining at its highest level in decades. 2 aspects of technology. Technical buy signals for silver include the pattern of higher lows since September 2022 and lower highs in the ratio of silver to gold. Silver can be extremely volatile, and bull markets rarely move in a straight line. On the 1-year silver futures chart, historical volatility stood at 20.5% as of June 2. The gold futures chart's 1-year metric was 11.63%, which indicates that silver price variance was nearly twice as high as gold's historical volatility. In the event that valuable metals keep on posting gains, and history is an aid, silver will beat gold on a rate premise on the potential gain. SLV is an option in contrast to actual silver or silver fates. The most immediate course for an exchanging or venture position silver is the actual market for bars and coins. Silver is a heavy metal that needs to be stored and insured in order to be held in physical form. Due to their physical delivery mechanism, COMEX silver futures are also a direct route. However, futures involve leverage and margin. The iShares Silver Trust, SLV, is an ETF item that implies to hold silver bars. On June 2, the highly liquid SLV product had $10.99 billion in assets under management at the $21.77 per share level. SLV charges a management fee of 0.5% and conducts daily trading of more than 16 million shares on average. The July COMEX futures increased by 31.35% during the most recent rally in the silver futures market, moving from $20.125 on March 10 to $26.435 on April 14. The SLV ETF went from $18.38 to $23.89 per share, or 30%, during the same time period. The ETF possibly exchanges when the U.S. Securities Exchange works, while Silver Prospects exchange non-stop. When the stock market is closed for business, the ETF may miss highs or lows. After reaching a high of 2023 in April, silver stopped moving, but the price action of the past few weeks could lead to even higher highs later this year.